Now, the Central Bank of Nigeria has informed the Financial Market Dealers Association of a phased operational overhaul of the Nigerian fixed income market. Now, the first phase covers the move of trading platforms and settlement process to the Central Bank of Nigeria. Abiola Rasaq, an independent analyst, joins me now for this discussion. Thank you so much for joining us on the show today, Mr. Rasaq. Let's start really now with what this takeover means for the market.
Thank you so much, Mr. David. Thanks for having me. I think the important thing we need to note here is what is the objective of the Central Bank of Nigeria for taking this step? The very first important thing that the Central Bank has mentioned is that they want to increase the level of transparency and efficiency. It's still preliminary to really say how exactly this will work out. The UAT is going to start next week, and we're expecting to see how the framework would go. And hopefully that would enhance our ability to be able to speak to the effectiveness or the efficiency of this new policy. However, I think that this is coming on the back of the confidence that the central bank has in the FX matching system, which I think to a very large extent we might say has improved the level of liquidity and transparency and efficiency of the FX market. Hopefully, this step that the central bank has taken does not disrupt the system, and I think the central bank does recognize that, and that's why possibly they want to have a parallel run over the next couple of weeks before we finally transit into this new system in December.
I like the fact that you also highlighted the need not to disrupt the market, because when we are looking at the pilot phase also running concurrently with the existing system and then the timeline for full migration, where are the big concerns for you and whether or not these timelines are feasible? You talked about the user acceptance testing, which should come sometime next week.
You're very right. That disruption is something that is really very important to watch out for. And beyond even the disruption, the question is whether or not the central bank should actually be taking control of trading platforms in the market, especially for a central bank that has communicated its interest in actually providing a private sector-led financial market growth. However, I think it's instructive to say that the jury is out there to see how this would play out, whether or not it's going to be more efficient than what we have. We've come a long way in the market. You remember about 15, 20 years ago, before the establishment of the FMDQ itself, what we used to have is the Reuters 3000. That market wasn't as transparent as what we have in the market today. And we're hoping that the Central Bank of Nigeria is planning to have something a lot more transparent and more efficient than what we currently have under the FMDQ regime. But again, like I said, it's still preliminary because I'm not privy to the framework itself. So we really can't say for now whether or not this is going to be more efficient than what we have. But I do hope that this is going to be something that's going to be more efficient, and hopefully this doesn't disrupt the market like you rightly mentioned.
Yes, we'll definitely keep our fingers crossed to see how this impacts FMDQ and even looking at the Securities and Exchange Commission. But now let's shift gears towards drivers of system liquidity at this moment. Now we're seeing investors leverage the robust liquidity. I would like your take around that, and also looking at the CBN's monetary policy rate cut we had, and then in terms of the revision to the standard facility corridor as well. Now, your take around these signaling.
Just like you rightly said, the 50 basis point rate cut is a major signaling effect, has a major signaling effect in the market, because that reinforces the confidence that the Central Bank of Nigeria and the Monetary Policy Committee as a whole has in the stability of the system. Over the last 2 years, the Central Bank had taken out quite a number of initiatives to stabilize the system. Now the central bank and the MPC is communicating that the system is now stable, and they now want to begin to pursue pro-growth initiatives. So this 50 basis point pretty much signal that confidence that they have that this is now the time to begin to put in measures to grow the economy. Recording a 4.23% GDP growth in the second quarter of the year, I think that's pretty much impressive. And while one might argue that this is not the level of growth that Nigeria requires to be able to make meaningful impact on the people on the street, but of course, this also speaks to the fact that the Nigerian economy is turning the tide. Beyond that, I think it's important to say that the 50 basis point rate cut has also provided some momentum in terms of appetite within the fixed income market, and we've seen a bullish run since that rate cut. What we have now is pretty much a fully inverted yield curve, where the long end of the curve is now really pretty much trading at relatively lower yield compared to the shorter end of the curve. And what this signals, when you have an inverted yield curve, it might signal two things. Is either you are expecting a recession in the economy, or you are expecting a lower rate environment. This time around, all the major economic indicators are pointing to the fact that the Nigerian economy is rebounding. So the question of recession is completely out of the door. The only thing that we do have today is a signaling effect that reinforces the confidence that not only the Central Bank of Nigeria has in the economy, but of course the global investor community as well. And that's why we begin to see more and more appetite for fixed income instruments. We've seen significant bull run over the last 2 weeks in particular.
Okay, Mr. Rasaq, we'll leave the conversation here for now. I've loved the outlook, but we're pressed for time. Thank you so much for your time. That was Abiola Rasaq, Independent Analyst over there, speaking on Nigeria's fixed income market.